Hello, welcome to this video training series. Now I'm genuinely buzzing to deliver an insane amount of value to you over the course of these next few emails in this training series. Now, whether you have absolutely zero knowledge, maybe you've been dabbling for a little bit, maybe you consider yourself, quite experienced and you've been doing this for a few years, I guarantee that you will get three things from this series. One, you will get a higher strike rate. Two, you will start achieving higher risk reward on average on your trades. And three, you will get extreme clarity. You will know what you are doing in every single scenario, but also outside of the charts, you're gonna get extreme clarity on what processes and the roadmap that you need to follow to achieve your trading goals. Now, we all have different goals in trading. Some of you will want to be acquiring funding. Some of you just want to trade your own capital. Some of you might want to try and manage private investor capital, right? Maybe you're just thinking about, you just want to quit your job, get freedom without having a boss and just get that financial independence. Maybe you're thinking about, trying to buy your dream apartment, buy your parents their dream house, buy the Lamborghini. Maybe you're picturing yourself, on your yacht in the Mediterranean, whatever that may be. Now look, I am not here to sell you that dream. That is not what Photon is about, and that is not what this video series is going to be about. Quite frankly, the odds of success in this industry are stacked against you. The cold hard truth is most people are simply not cut out to make it in this game. But I'm looking for the people who are serious, who do want to put in the work, and who back themselves to make it. Now, if that is you, I'm here with this training series to give you what you need to implement, what you need to execute on, and the roadmap that you need to follow over the coming months and years in order to give yourself the best possible chance of actually achieving your goals. So in this series, I'm going to give you exactly what you need to do that with no bullshit or fluff. So how are we actually going to achieve that, and what can you expect in this training series? Well, just for a minute, I want you to think about an Olympic weightlifter. Now, if you've ever seen one of them do a clean and jerk, they essentially do this one big fluid movement where they get a super heavy weight above their head. Now, if you think about a professional trader, when they're at that level in which they've mastered their craft and they're making money, it can look relatively effortless. It doesn't take them that long to do their analysis. It doesn't take them that long to know what they're looking for, to make a decision, and it looks like they just click and buy and sell. The same can be said for an Olympic weightlifter. It just looks like they walk up to the weight, put a bit of effort in, but they can throw it above their head. People want that end result. They want the easy buy and sell, make money from their bedroom or whatever it is. But what they haven't realized, if we go back to the analogy of the weightlifter, is that that simple movement is made up of years and years of them doing the boring foundational work that makes up that movement. The deadlift, the clean, the front squat, and the press, right? They just spent years literally just doing a deadlift, just picking the weight up the floor, but mastering their technique in exactly how they do that, okay? We have to do the same with trading. If you just, go up to pick up that weight and throw it above your head without practicing those individual parts, without mastering them, you might get away with it when there's fuck all weight on the bar, but as soon as you get to that professional level, you've got to put as much weight on the bar as possible, i.e. trading big trading accounts, trading investor capital, having that pressure on there. If you have not laid the foundations correctly, you're going to crumble, you're going to blow your back out. Okay, so just a bit of an analogy that I want to use here to explain how we are going to take you through those foundations. We're going to build it from the ground up, and I'm going to show you the exact mechanical processes that we use. Okay, so we're going to cover market structure in depth. We're then going to look at institutional supply and demand. We're going to look at liquidity concepts, the kind of secret sauce that we use for that. We're going to look at advanced trading plans. We're going to look at how to master trading psychology, tips and hacks, and how to pass funding challenges, and much more. Now, some of you are probably wondering, who on earth am I? I'm Matt Dunleavy. I'm the founder of Photon Trading, and we help traders not just acquire funding, but actually scale their capital using the power of mechanical strategies. So I started my trading journey back in about 2015, where I worked as an analyst on a trading desk for a big multinational energy company. So then on the side, outside of work, I started to teach myself how to trade Forex, just using kind of simple retail strategies, support and resistance, EMAs, Fibonacci's, all that good stuff. Then I started to trade pattern trading, like bull flags, bear flags, channels, and that really accelerated my results, but I found it very, very hard on my psychology because there was a lot of discretion involved. So then I discovered supply and demand trading, but not just that, but I actually figured out how you actually trade mechanically, how you try and systemize what you do and make it as rule-based as possible. And that for me is where everything changed. That's where I could have a systematic framework to rely on that removes 90% of the psychological issues that you'll have allow me to backtest consistently, allow me to trust the data, and allow me to identify how I could improve my processes. And I've been trading that current style since about 2018 now. Now, obviously, it's evolved and improved a lot since then, but it's essentially made up of 3 core concepts, which is market structure, institutional supply and demand, and liquidity concepts. And that is what I'm going to show you in this video series. I'm going to reveal the curtain and show you exactly my process that I use in the market. Now, I initially launched Photon Trading as purely just a small passion project back in 2020, just where I was mentoring a few guys. But as I started to share some of our approach onto YouTube and social media, we've just absolutely blown up. And now we have an amazing community where our sole mission is to produce independent and consistently profitable traders. And we have had a ton of success with the guys implementing our systematic frameworks. You can see a ton of our case studies on our website if you want to dive into them. But we literally have members now, consistently withdrawing 5 figures from prop firms, scaling their accounts, taking on private investor capital, but really just having that confidence and that clarity in knowing what they're doing and that they can do it in an independent way. And they don't have to rely on us or rely on other traders, but they've developed their own style and they can have that skill now for the rest of their lives. Now, what I believe sets us apart at Photon and why we get members' results is because we have tried to make our strategy as systematic as possible. Now, it's not 100% mechanical. There is room for about 10-20% of room for discretion. And we'll talk about the benefits of this in future videos, but we're going to show you how you can make your strategy mechanical and how to use it in the methods that we have used in this series, because it really is a game changer. We have now developed a strategy to give us a high frequency of setups because we've realized that that is a big psychological hurdle that a lot of traders have with being patient in the markets. That's a massive improvement we have made. That's really accelerated students' results. And also, we are very, very strict at maintaining a professional culture in our community. We do not allow dick measuring. There's no random, MetaTrader screenshots. We enforce high quality analysis, and that means everyone ups their game. Everyone is helping each other. And just really keeping those professional processes in their mind. And that is how you get long-term consistent results, not just fluking, random funding challenges here and there. We have an extremely structured and holistic approach to how we do things, like I said, right? It's not just the technicals, it's on everything around that. The processes that you need to be consistent, how to master your trading psychology, and how you set yourself up for long-term success. And we're going to cover that and more in this series. So look, that's a quick introduction as to what to expect at the rest of the series, a bit about me, a bit about Photon, and what we are all about here. But I'm not going to just talk any more words at you. Let's dive onto the charts. Let's get into the juice of the value that I want to provide for you. I'm super excited. Make sure you take notes, watch this as many times as you need, and get ready to level up. Alrighty, so as I was saying before, if you want to make consistent profits, you need consistent actions. You need to build a solid foundation for how you approach the markets every single day. Now, for the way that we trade at Photon, that always starts with market structure. That gives us our directional bias for the session. It allows us to know what is the direction ultimately we want to be trading in. Once we have defined that, then we use supply and demand zones, institutional supply and demand zones, to help us time that market direction, right? We're not just going to buy straight away because we're bullish. We need to wait for price to pull back to those high probability areas that we think that directional bias is going to play out in our favor. The next layer of analysis on top of that is then liquidity concepts with the mechanical way in which we use that. And that again helps us just with refining and timing that overall trade idea, okay? Once we have all of that in place, that essentially then gives us our entry model, and then you're in the position and you manage it, right? So those entries and that trade management is the last thing you want to be thinking about. Market structure is always the very, very first thing and the main thing I'm looking at, and that is what we're going to cover in today's lesson. So look, we're just going to start off with the basics for the first couple of minutes, but if you're a bit more intermediate or even advanced, we're going to get into some advanced structural concepts pretty quickly. So bear with me for a couple of minutes and then we'll get into it. So basic market structure, left-hand side, right? If we are in a bullish market, in other words, an uptrend, price will make a series of higher highs and higher lows, okay? Pretty simple stuff. Now, every time that we have a break of structure, so a break of a swing high, we immediately need to start thinking, okay, at some point that swing pullback is going to start. So every time we have a break of a high, rather than just thinking, okay, we're going to be going to the moon, you actually need to start thinking the opposite and thinking, I need to be prepared for that pullback to happen to value, okay? Now, when we get that break of structure, this then becomes our new swing low, right? Because this is the low that led to the break of that high. So when price is at this point, we can now draw our new swing range, okay? This is the new range that we are working within. It's a bullish swing range. After the break of structure, what do we expect? We expect price to pull back. So when price is moving down, we can look to short this and we can look to play that pullback. But because we understand that we are in a bullish swing range, we know that this is a strong low. It has done its job. And therefore, we expect that price will not trade lower than that low, okay? Because for the bullish market to continue, this low should be respected. It should hold. So we can play the pullback, but we know that price shouldn't break this low here. And then we look to try and capture that next pro trend run to the upside, right? We target this weak high over here, right? Because we expect it to fail once the pullback is over, and we look for that new high. And then it's just the exact same framework again, right? After a break of structure, what do we expect? We expect a pullback, right? When that break of structure happens, we identify where our new swing low is. Here is our new swing low. We can map our new swing range, okay? And now we're working within this bullish range. So we can play the pullback, but we expect the low to hold, and then we look for the new run, okay? Nice and simple in that regard. And then it's the exact opposite for a bearish market. Price is making lower lows, lower highs, lower lows. That high has now done its job. It's a strong high. It caused a break of structure. After we get that break of structure, what do we expect? We expect a pullback. So we need to start thinking about that pullback kicking in. We can look to play that pullback. We can look to buy. But what do we expect? We expect this high to hold. This is a strong high. It did its job. It caused a break of structure. Therefore, we can look to play longs, but no further than that high. And then ideally, we want to be capturing that next pro trend run. And where are we targeting? We're targeting the weak low. Why is it a weak low? It's a weak low because it failed to take out the high, okay? So the whole idea with market structure is that you want to be trading from strong structure. So if we're in a bearish market, we want to be shorting from this strong high, right, with our protection and targeting the weak low, right? This is a weak low because it's failed to do its job. And if you can get your head around that, that really underpins ultimately everything we're about to do. Obviously, we're going to make it more complicated and layer a lot more analysis. But in its most simple terms, we want to be identifying whether we're bullish or bearish from a market structure perspective, identifying where is my strong structure, where is my weak structure, and I want to be trading from strong, targeting weak. If you do that over a large sample size of trades, you are going to be on the right side of the market far more often than not, and it's going to make your life so much easier. Now, obviously, this is quite a basic diagram. Markets look a lot more messy for most of the times in real life, right? So if we kind of look at a messier example here, I'm just going to zoom into this bullish range, this bullish structure. Sometimes we have a bit more complicated. So same framework every time. We're in a nice bullish market, okay? After swing break of structure, what do we expect? We expect a swing pullback, but we expect that strong low to hold, right? So we can look to play the pullback down to the low, and then we want to try and capture that next bullish swing leg to the upside, okay? What do you know? After a break of structure, what do you expect? We expect a swing pullback on this time frame. Now, let me bring it one step back. When we have this break of structure here, okay, and we know we get that new boss, the first thing you actually want to do is look back and go, where is my new swing low, okay? Because when we were back here and prices say around here, this was the swing low, this was the swing high, and we were trading between those two red lines. But when we get a new boss, that now means we are working within a new swing range. So the moment that we get that break of structure, that swing break of structure, we want to look back and identify where is our new swing low, okay? The rules that we use is the swing low in a bullish market is always the lowest low that caused that break of structure, okay? So from the previous high to where it was broken, we want to look back and find the lowest point, and that's the lowest low, okay? So it's kind of obvious in this example, but sometimes in the market it's not as clear. So a quick tip you can use if you're ever not sure is take a box, draw it from where the previous high was to where it was broken, okay? And then drag your box down. And the new swing low, will always be the lowest point within that box, okay? It's just a little tip for you. Now, the reason why that's important, and this is where so many people go wrong in the market, is they will identify the swing break of structure, okay? And then they'll see price pulling back. And what do? They go, well, price has come down now and it's broken this low here, right? This low to the left. So now they now think that we're in a bearish market, right? So they may now be shorting, and they're looking for price to come up into here. Maybe they've got their supply zone, right? And they want to get short. And then what happens? They get smashed. And they're thinking, well, why has that happened? Like, we're in a bearish market. I'm trading in line with the trend. Like, why am I keep getting on the wrong side of the market? And it's because they haven't correctly identified where their true swing range is. And why is that? Because this is the true swing low, right? Not this most recent low here. We always take the lowest point. So when we get that break of structure and we then identify the new range we are within, okay, we understand that we're just playing the swing pullback at this point, and we actually expect this strong low to hold, and we are anticipating that we're going to get that next bullish leg to the upside, okay? It's simple but powerful things, and these are the things that can give you the basis of your framework to trade with confidence and always have extreme clarity of what your primary expectation is of how price will behave. Okay, we're still dealing with probabilities. This framework is not going to give you 100% strike rate, of course, but this is how you lay down that mechanical framework to have that confidence to know what to expect. When we also get more complicated price action and we're dealing with multiple time frames, I'm going to show you how we can handle that. So just thinking about what we just went through, just purely from a swing structure perspective and purely just on one time frame at the moment, let's look at this, right? So on the 4-hour chart here, we see we're in a clear bearish market. We have this swing pullback and then we get a break of structure. So as soon as we get that break of structure here, the first thing we want to do is look back and go, where was the highest point that caused the break of the low? Okay, here is my new swing high, right? We expect this high to now hold. It's a strong high. It's done its job. What's the other thing we expect after a break of structure? We expect that swing pullback to kick in, okay? Now, obviously, it's not going to happen straight away, so we can still expect more bearish pressure, but we have to anticipate that at some point, that pullback's going to start to kick in, okay? Then we get another break of structure, same thing, identify where the new swing high is. This is our new swing range. After a break of structure, what do we expect? We expect a pullback, okay? Another break of structure, new swing high. Always be aware of where your current range is, or where price is within that current range, and that is going to be what we're working within, okay? So I think you guys kind of get the picture with that. I'm not going to bore you to death with it, but essentially we continue getting lower highs and lower lows, and then eventually the market obviously isn't going to trend in one direction forever. We're going to get that shift in structure, and as soon as we get that higher high here, the market has now changed. We are now instantly into a bullish market here on the 4-hour chart. So the moment we get that boss, what can we expect? We can expect a swing pullback, but also we identify the lowest point. This now becomes a strong low, okay? When we were trending to the downside here, all of these lows were weak. Why? Because they never broke the swing high, right? They never did its job. But this low down here, this is now a strong low because it did break the swing high. It caused a swing break of structure. So why is that useful information? Well, it means that we can play shorts here and we can look to play the swing pullback, but we understand that as we come into this strong swing low, we expect the pullback to end, we expect this low to hold, and now we're now expecting that next leg to the upside. And where are we targeting? We're targeting the weak high, right? And so on and so forth. We get another break of structure, tidy it up a little bit. This then becomes our new swing low. So as we're playing the pullback, we can play shorts, but we understand that we're not going to target past this low. This is a strong low. And although, as we can see in markets, right, price actually can be a bit tricky at times. It's not always super easy. But what does our framework give us? It gives us confidence that ultimately, whatever price does here, we still expect that it won't trade lower than this low. And that's really useful information to help you formulate trade ideas and to trade with confidence that we're expecting this high to break, because this high at this point has not broken any swing low to the left. Yes, it's broken this low and it's broken this low, but that is not relevant to our swing structure, okay? And then again, the market continues up. Now, that's reasonably simple swing structure, but there will be times where the market is a lot more volatile and it can form these bigger ranges and you get complex price action within. And I used to get chopped around a lot with that because I didn't quite fully know how to deal with it. But now we have a more advanced framework to help us deal with that. So let me show you that. So far we've just spoken about swing structure, okay? One time frame and one type of structure. What we have is we have 3 types of structure with the framework that we use, okay? Swing, which we've looked at, internal, and something called fractal. So let's go through it slowly and it will all start to make sense. So the main and most important structure is our swing structure. And that is this red line I'm about to draw, where we have that big swing pullback, we have the swing break of structure, and then essentially this is our swing low and this is our swing high, okay? So I'm sure some of you will have experienced in the market. Sometimes we get these big impulsive, like one almost straight move to the downside, and then that ends up giving us this big range to work within. But then because you have a big range, what then happens is price can form complex structure within here, okay? And we need a framework to know how do we deal with that price action within there, so we can essentially trade the internal trend that forms within the larger swing range, right? So you guys should now be comfortable with how we map our swing structure. The next layer we then want to look at is the internal structure within that. And that's essentially these ranges here that I'm mapping on, okay? This is what we call the internal structure, and it's the swings within the swing high and low, right? This is our swing high, this is our swing low. So let me take it a step back and I'll build the story and you'll start to see how it all makes sense. So we are in a bearish swing range, we get our swing pullback, we then get our swing break of structure to the downside. So this becomes our new strong swing high, right? That did its job. Now, after a swing break of structure, what do we expect? We expect a swing pullback. Sometimes what you'll get is you'll get these sort of little pullbacks that they're not quite big enough to call swing structure. Relative to the recent price action, it's a smaller pullback. It's not significant enough to be swing structure. So what we do is we call this internal structure. It's where we have just a little internal pullback, okay? And then we continue that overall swing, one big swing leg there to the downside, okay? Now, the signal that we use from a structural perspective to tell us that that larger swing pullback is starting is we want to see that internal break of structure to the upside, okay? We want to see this internal structure shift bullish. Once we get that, we call it an IBOS, an internal break of structure. That is now a very strong structural confirmation that that larger swing pullback is now starting, and now we can trade that, okay? So when we get that IBOS to the upside, this becomes our strong internal low, and it's the exact same framework. Now we look to play the internal pullback, but we expect this internal low to hold. And then this is a really high probability buying opportunity to play the swing pullback in line with the bullish internal trend, okay? So we're in a bearish swing trend. We look for the internal structure to shift bullish. That then signals the start of the swing pullback. And now we can follow this bullish internal structure to play that swing pullback, okay? We expect the strong internal low to hold. Price comes back in, we can look for longs to then target the weak internal high. See how it's all the same framework, but we're just applying it to the structure within the swing structure. Okay, it's like multiple layers. It's kind of a bit like Inception, right? So again, when the internal structure changes trend, that signals the start and end of the swing pullback. So when it changes bullish here, now we're playing the swing pullback. We pull up to the strong swing high. We expect that swing high to hold, right? Because it did its job. So now when that swing pullback is over, the structural confirmation we look for is for the internal structure to then shift bearish, okay? Because the internal structure signals the start and end of the swing pullback. So once that shifts bearish, this internal high is now strong, right? Because it did its job. So we look to play the internal pullback, but we expect that internal high to hold. And then this is a very high probable area to get short because it's pro internal trend, pro swing trend. And now where do we target? First target is down to that weak internal low, right? Because it's failed to do its job, failed to break the high. And we keep following that all the way down until it takes out the weak swing low, okay? So if I could summarize that in the most simple fashion, because it might be a lot to take in for some of you at the start, we're in a bearish swing trend. After a swing break of structure, we want to play that swing pullback. We wait for the internal structures to shift bullish just to give us more confirmation. Now we want to get long and we want to follow the bullish internal ranges. We've now pulled back up to the area in which we expect price to now reverse, right? Because we expect the swing pullback to end. Let's wait for the internal structures to shift bearish. And now we can follow those bearish internal ranges, shorting from the protected, those strong highs, targeting those weak lows until we take that weak swing low all the way to the downside. Then we get another swing breaker structure. And then we just repeat that whole process again. So you see how this is really like a strong framework now that allows us to map the market, and we know every time at what phase of the market, what directional bias we have, and when we expect price to reverse. It's super, super powerful once you get your head around it. Now, there is a third layer of structure, and that's what we call fractal structure, okay? And that's when we have these very, very tiny little price movements within candles, okay? And this is the most aggressive type of structure. And essentially, it gives us our first little signals, but it can give you a lot of false signals, okay? So you have to be careful with this. The way that we approach fractal structure is that it signals the start and the end of the internal pullback, okay? So remember, with internal structure, that signals the start and end of the swing pullback. Fractal structure is the start and end of the internal pullback. So what do I mean by that? Well, when we get this swing moved to the downside and we're looking for that swing pullback to start, the IBOS will signal when that's starting for us. It helps to give us a signal. So when we get the bullish IBOS, bang, really good confirmation the swing pullback is starting. Down here, when we get the fractal change of character, okay, so I should have said that. When we get the fractal structure changing trend, we call that a change of character, okay? A CHOC. Some of you might have heard that. I'll just put it CH here. So when we get that and the fractal structure shifts bullish, at that moment, we can't say with high conviction that the swing pullback is starting, but we can say that at least the internal pullback is starting, right? That's that first sign, internal pullback starting. Then it turns out to be an internal reversal, okay? So then we get the bullish IBOS. After a bullish IBOS, what do we expect? We expect an internal pullback. So that fractal structure changing trend, that change of character, that CHOC, that now signals the internal pullback starting. But what do we expect? We expect that internal low to hold. So we just look to play the internal pullback. And how do we know when the internal pullback is finished? You've guessed it, right? It's a change of character. We look for the fractal structure to shift bullish. At that moment that it shifts bullish here, we now know it's very likely, not a guarantee, but very likely the internal pullback is over. And now we can look for that next bullish leg to the upside. Same thing, IBOS. Look for a CHOC, signals the start of the pullback. CHOC signals the end of the pullback. Now we can target a weak high, right? So do you see how they all start to layer together? I know it's gonna be a bit complicated if it's the first time you're hearing it, but if you follow this framework, rewatch this video, you will start to get it, okay? Now, you don't have to wait for, say, a bearish IBOS up here to want to get short to then target this low, because if we come into the strong high, you guys will learn in the next few lessons, we've got supply and demand, and we get a change of character up here, we can get in early and we can get short here in anticipation that we're going to get that bearish IBOS right and play these moves to the downside. So hopefully that's all starting to make sense. Watch this as many times as you need. And we're going to just look at a quick example on the charts to tie this all together. Alrighty, so we looked at a kind of few examples or simple examples of swing structure. But like I said, sometimes we get these big volatile moves where after the break of structure here, price kind of just free falls a little bit and we don't really get any significant pullbacks until here. So what does that mean? Well, it means after the break of structure, if we look back, where was the highest point that took out the low? It's here. This is our swing high all the way up here. And then this is our swing low all the way down here. And that means you now have a massive swing range to work within. So that's why we use the three types of structure to allow us to trade this price action within here with a lot more confidence, okay? Identifying where are my strong and weak internal highs and lows, and then looking at the fractal structure within that, okay? So let's dive into it. We get the swing breaker structure down here. Now we get a bit of a pullback, but it's not significant enough relative to recent price action, right? These are obviously the large swing pullbacks that we're looking for. That's not quite there. So this is just a continuation of that bearish internal range, right? And then we continue down, have another little internal pullback, not quite big enough. And then we come down and then eventually we get that bullish IBOS. So if you remember the framework, right? Once we get that bullish IBOS, what does that signal? It signals, okay, now the swing pullback is starting, right? So now, when we get that bullish IBOS there, instantly, this becomes our strong internal low. So after the IBOS, at some point, what can we expect? We can expect that internal pullback to happen. Now, let me just zoom out a little bit just so I can try and not lose you guys, right? Because I appreciate this can be a little bit confusing to get your head around initially. This is our swing high all the way up here. This is our swing low, okay? We've had the bullish IBOS. So now what we're expecting the internal structure to remain bullish, to play that swing pullback, and then eventually when that pullback is finished, we then look for the internal structure to shift bearish, and at that point, what do we know? We know the swing pullback is finished, and now we know the market is looking to take out this weak swing low, right? That's the overall framework. So when we are within here, and we get that bullish IBOS, we know that that internal pullback can kick in at any moment, and that's where we look at the fractal structure within here to signal that that pullback is gonna start. Now, it's beyond the scope of this lesson to show you exactly how we map fractal structure, but in Photon we have 100% mechanical rules for that. My developer has literally coded it, you can code it. And yeah, it's beyond the scope of this lesson, but it's basically an aggressive way we look at it. And it will give you a few false signals because it is aggressive, right? But essentially we look for these shifts in structure and then eventually we get that pullback. Now we expect price to get another bullish leg to the upside. And what do we get? Within here, we get a bullish change of character. That's where the fractal structure shifts bullish. And what does that signal for us? It signals the end of the internal pullback, right? It's basically this part of here of that mapping. We get that, and now we look for price to target that weak internal high, right? It's a weak high because it failed to take out the low. So now we have had another bullish internal IBOS, identify the lowest point that took out that high, right? So this is now our new range we're working within. You always want to identify what is the current range I have to work within, and then you can identify your trade ideas from that. So we know that we're in a bearish swing range. Now we're in a bullish internal range. So what we look for is shorts down into the internal low. And then we look for what? We look for a bullish change of character here. That signals the end of this internal pullback. Okay, and now we can look for what? Look for longs within here. And where are we targeting? We're targeting that weak internal high. Okay, so bullish internal range, look for the pullback, bullish change of character. Now we know the internal pullback's likely over, and now we want to look for longs to take out this high. And it's just rinse and repeat, same framework. But eventually, as we pull back up to an area of value, right, we'll get into supply and demand and other concepts in a bit. We can anticipate that swing pullback is over. We can anticipate the internal structure is ready to shift bearish, and now we're ready to take out that low. Okay. So I'm not going to go over tons and tons of examples, but you guys can go and back test this and apply it to the charts. You can see another quick example here. Bearish swing range. We get the bullish IBOS playing the pullback, and then we can look to follow these larger bullish internal ranges, and then eventually we ended up getting a full-on swing reversal. Okay, but it's super powerful, right? We get the IBOS here. We look to play the pullback. Then we get the bullish change of character, signals the end of the internal pullback, and now we can look to follow this bullish all the way up to here, and it gives you so many trading ideas for your session. Okay, so hopefully you took some value from that. I'm sure some of you would have learned some new things. It can be a little bit overwhelming at first to get your head around this, but watch this as many times as you need, and I promise you this framework is so powerful when you get your head around it. Every morning I come to my charts, it's the first thing I'm looking at. I'm mapping my structure, working my way down. We're going to get into multi-time frame analysis in the next lessons. But when you have your structure mapped correctly in that mechanical way, and you can identify your directional bias for the session, it makes your life so much easier. That's when we can layer in our supply and demand, look to time those trade ideas, introduce our liquidity concepts to give us a mechanical way to enter the market with increased strike rate, with increased accuracy. That is how you trade professionally with the approach that we use. So I'm excited to really get into the rest of the juice in these lessons. So make sure you keep an eye out on your inbox for the rest of them. And yeah, see you in the next one, guys. Cheers.